All right, guys, we got PPI inflation data today. It is expected. Whew. JP Morgan just reported numbers. We'll talk about those in a second. So did Wells Fargo. But yeah, we got Wells Fargo's numbers right here on chat. You can see Wells Fargo posted 139 EPS, 139 EPS versus 122 estimate. Sales of 20.149 billion versus 20.74. Missed the revenue expectation, or missed the revenue numbers. Beat sales for Wells Fargo. JP Morgan ended up posting 507, beat 462 EPS. Sales of 46, beat 44 estimates. And then we got PPI inflation data. Year over year expected at, or no, month over month, I'm sorry, is what PPI goes by, month over month. .2%. Core expected at 0.3. So this is the data that just showed up. I'll put this up on screen here so you can see it. I don't know, what have I done? I'm trying to shrink this right now so you guys can actually see it. There we go. All right, here is the data right there on screen. A little small. Let me know if I could probably make it a little larger if you want. But let me know if that works. Again, you see JP Morgan's up. I'll try putting it a little bit larger up like that, maybe. There we go. All right, chat. What's up, guys? Good morning. Yeah, slightly green day, honestly, but we had a red day yesterday, and it's kind of going back and forth. Like, here's the NASDAQ. Had this big pullback, bounce back up. Now we're kind of falling down a little bit here. So, let me do a poll here. Does PPI come in higher or lower? Is what the question is going to be. Point 2% expected month over month. Higher, lower. Yeah, so again, PPI is expected at 0.2% month over month, 0.3% for core. Yeah, I'll put a timer up. Did you beat the S&P in the last 5 years? I have to go check. I know I was green last year. I'll have to go see what I did the year before. In actual net, I think unrealized I was probably green the whole time, but it depends on whether I actually took profit, which is a different thing. But either way, like, I don't even claim to be a good trader. Like, I'm not an investment professional. I'm not liable if you lose money. You always got to make your own assessment, figure it out yourself. I don't even claim to be good. That's not really my thing. My channel's called Beginner Trading. So, I mean, we're not really one of those guys selling courses, acting like the greatest trader of all time. Definitely top 3, but, you know. Understand all the stuff on screen, not an investment professional. Remember, I might be terrible and have no idea what I'm talking about, be wildly wrong about anything I say. Don't copy me, not an investment professional, chat. Understand CFTC 4.41. Learn it, remember it. All right, let me get the timer up here. We got an hour and yeah, we got like an hour and 23 minutes left. Yeah, that's pretty much right. Here's a timer. VIX hanging on. Yeah, we also have the University of Michigan inflation expectations and consumer sentiment report, which is going to be a big thing too. It's relevant for sure. Yeah, it's been a crazy time for markets. It really has, dude. Markets are volatile. But again, JP Morgan, BDPS beat revenue. Wells Fargo missed EPS. Or BDPS missed revenue. Or sales, whatever you want to call it. You know, and the big news that happened is that the Chinese raised tariffs to the U.S. again. All right, so Canada agrees to drop tariffs tomorrow if we do the same. That's another news release that came out overnight. 30-year mortgage rates are back up to 7.37, the highest level in 2 months for 30-year mortgage rates. Bro, I ain't getting a mortgage at all right now. I mean, I've honestly been very blessed to never need a mortgage. I've never had a mortgage in my life. I'm definitely not getting one now. You know. Yeah, but China increasing tariffs on U.S. goods to 125% is the big breaking news. And I was just lucky to make enough money to where I didn't need to mortgage anything, and yeah, but mortgage rates crazy high right now, crazy high. And that's honestly, we saw the NBA 30-year mortgage rate decrease last week or earlier this week, so it's interesting that they're up. Yeah, cash is king, 100%. Hey John, do you think the market fears inflation more or a recession more? Well, we can look at bond yields and see they definitely feel inflation to a certain extent. Like, here's bond yields. Bond yields have been spiking up. Hasn't even opened yet, so if you look at the 10-year yield, bond yields currently a little bit lower, or no, they're about the same, 4.39%. So this is the same. So bond yields, yeah, 4.397. So they're actually a little bit above this. They're about right here. Bond yields are up, which means that there's a higher interest rate sentiment, which means that inflation is the bigger fear right now. I mean, it all has to do with treasuries, but I think there's a lot of everything. I think inflation with tariffs. I think the way you got to look at it, the way a lot of people are looking at it, is people are fearful of tariff trade battle making inflation worse, not better. And so they're fearful of this trade battle making inflation worse, not better, is what's going on. Looking at our poll, we're pretty split down the middle in this one. 51% think lower, 49% think higher. Market is up on bad news. Yeah, it is. Yep. What a crazy market. BJJ is good. It's good. It's fun. I train pretty regularly. Yeah, y'all just be careful today. It's a weird day, man. We got PPI inflation data today. We got University of Michigan consumer sentiment data. We got all the news coming out, the economic report news, all the stuff going down. So all right, so yeah, so I see people talking about mortgage rates going up too. Yeah, it's tax season. Bro, I've been doing my taxes and I'm so mad about it. I'm really so mad about my taxes, dude. Like, I overpaid so much taxes last year. Like, so much. You know. And then I was hoping like QBI. I was hoping QBI, if you know anything about taxes, would get me out of you know, a little bit of, you know, deduction. And I'm past the phase out amount for that too, so I don't even get QBI now. Not really happy about it, but oh well, it's okay. You need to spend more in your business. Absolutely, I do, honestly. But the problem is like my whole business is online here for this business. Like, we got other businesses that we do, but for this, my whole business is online. I figured it out. Like, I'll pay 2024 is going to be a better year for taxes, just because of how I've structured my business now. Like, I am now an S corporation, and I pay myself a salary, and I hired myself, and I pay myself a salary, and that reduces my tax liability by a lot, you know. But for last year, I didn't do that, and so last year, you know, last year was just a lot, and I'm not happy about it. I should have done it a long time ago. Oh, it absolutely is. Yeah, an online YouTube business is a great business, to be honest. I make so much more running this YouTube business than I ever do trading. And I'm always honest about it too, because most people, anybody that you see on YouTube trading, probably that's the truth for them too, depending on how big they are. If they're in a larger YouTube channel, that's the truth, 100%. And if they pretend it's not, they're usually lying. No, I'm not. Ask your CPA, Martin, is what I would say. Yeah, that's what I've done, Esteban. All right, guys, we got almost 400 here already. We still got an hour and 15 minutes before PPI inflation data drops. We'll see what the market gives us leading into this too. Yeah. Today we got PPI inflation data. I'm trying to check 30-year rates though. On like, where did they go up? I thought I saw somebody say that they were like 7.75%. Where did I see that? And what symbol can I check that for 30-year mortgage rates? And again, the finance ministry in China is going to impose additional tariffs on the U.S. goods from April 12th. They're going to raise additional tariffs on U.S. goods to 125% from 84% is the big breaking news today. Yeah. Yeah, S&P starting to dip down. Honestly, the market's pretty flat. Here's Apple. It's at 190s. Look at this dive on Apple here. We also got to look at the NASDAQ. We'll put up a shorter-term chart on the NQ here. Here's the NQ. So a lot of the stuff's turning down. So NQ at 18.5s right now, 18.5s. TNX still sitting up there. Gold broke all-time highs yesterday morning, or maybe it was early this morning. Yeah, gold's new all-time high, 32.55. This was only about an hour ago. 32.55 for gold. New all-time highs in gold here. Gold all-time highs. Fear looming. I don't know what's gonna happen. And I wonder what PPI inflation data is going to do to the market. Yeah, I heard mortgage rates went up to like 7.7 something percent. Is that true? Where did I see that? What symbol are they looking at to gauge this? Let me check and search. Gold is ripping. It could sort of 10K in the next 4 to 5 years. Maybe. JP Morgan's already out. A lot of the stuff. Again, if you follow me on x.com at beginner trades, I cover all the breaking news for earnings. X.com at beginner trades, even sometimes before I stream. Give me a follow there. You know, I covered Wells Fargo, JP Morgan. JP Morgan showed up 507 versus 462. EPS sales of 46 versus 44. BDPSB revenue, JP Morgan is up today. Wells Fargo posted they BDPS missed revenue or sales. Posted 139 versus 122 EPS sales of 20.14 versus 20.74 expected. Jamie Dimon also commented on the economy. He said, quote, "The economy is facing considerable turbulence, including geopolitics, with the potential positive of tax reform and deregulation and the potential negatives of tariffs and trade wars, ongoing sticky inflation, high fiscal deficits, and still rather high asset prices and volatility," end quote. Jamie Dimon, as of a couple minutes ago. And so, yeah. Give your analysis on GameStop. Sure, GameStop. Okay. I'm going to be honest about it. And I appreciate the donation. I'm going to preface this with I have no freaking idea what GameStop's going to do. I'm not liable if you lose. We'll talk about the pros and cons of GameStop. All right. Number one, let's just put it out there. I'm supporting retail in this movement. I would rather support retail. Okay, so I hope GameStop succeeds. I really do. But that doesn't necessarily mean they will. And I think if they're going to succeed, they need to close unprofitable stores ASAP. Because I think with certain stores, I think they expanded so much in the mid-2000s that they have too many stores that are eating at their profitability, right? And that's hurting their stock, right? They got too many stores eating at profitability. And to their credit, they started closing stores down. And so I think that's a good thing. I think their pivot to collectibles and Pokemon cards is a good thing. I think, you know, collectible sports. I think they should turn GameStop's. They should keep it a video game store, but they also should transition to more of like a comics store as well. Like if you go to a comic book store, sometimes they have like card arenas upstairs. They've got like all these different things. They've got like Pokemon cards, Magic the Gathering cards. They've got comic books. They've got all this different stuff. And I think those audiences mesh really, really well. And so I think they should transition to that. I think they should transition from pure video games to gaming and comic stores, where they also have like Pokemon and card game tournaments and stuff like that. That's what I would do if I was them, you know. And I think they're kind of doing the same thing. They started buying and selling Pokemon cards, which is good. And if they can do it the best, honestly, I think what they should honestly do, I think the problem with how GameStop is approaching Pokemon cards and the likes of that, the problem is that if they want, okay, so I think they should give people competitive rates for Pokemon cards. This is what I think GameStop. I think GameStop should give people competitive rates for Pokemon cards, because that alone is going to get people in their stores, and then maybe they'll buy something else once they're in there. Versus what they're actually doing, which is giving people, like, they're kind of like lowballing people, very similar to how people buy used stuff from them and sell used stuff to them. They're kind of lowballing people with cards as well. But I want GameStop to succeed. I hope it does. I think it needs to close its unprofitable stores quick, and we'll see what the future holds. Stock is at $25. Not the worst share price, to be honest, relative to their earnings. And I hope it succeeds. Thanks for the donation. I appreciate it. There is no Top Step promo code, Mark. No promo code. It's just a link, bro. But yeah, thanks for the dono. Yeah, I mean, I think physical copies of video games are on their way out. I've been saying this for 5 years on this YouTube channel. Physical copies of video games are almost like they're on their way out. As somebody that plays video games pretty regularly, they're on their way out. How about baseball this year, guys? Baseball, torpedo bats. Honestly, it's been one of the crazier seasons. The Dodgers, you know, doing great. Honestly, the Dodgers doing great. Dodgers got the best team in baseball history, in my opinion, right now. One of them, at least. They got Shohei. They got all these freaking crazy good players. They did. I know they were 8-0. I haven't been following it the last few days. Now they're only 10-4, so they lost a couple games, but they went 8-0 for their first start, and they lost a bunch apparently. But yeah, I appreciate the love, guys. Thanks so much. Y'all hit the like button, hit the subscribe button. Thanks so much. Nasdaq starting to turn down a little bit. You know, we got gold breaking all-time highs. Yeah, pretty nice right now. Pretty nice. Quite a big chance to see again a bearish day this Friday. Today's Friday. Whew. Today's Friday. Yeah, I don't know. It's possible we get a bearish day. It depends on what the data shows up as, to be honest. Okay, so here's something that could happen. PPI inflation data might make the market go up. It might make the market go down. We don't really know. We'll cover it live at 8:30 in about an hour. After PPI inflation data comes out today, at 10 a.m. we got University of Michigan's consumer sentiment data. And while this is usually a small report, with this consumer sentiment, it's going to gauge economic look, as well as they give out, and these are the prelim numbers, so these are like the updated new numbers. Now, the problem is that we have inflation expectations that also drop at 10 a.m. and they give out 1 year and 5-year inflation expectations at 10 a.m. today. One and 5-year inflation expectations. And so that can be a risky thing. You know, that could certainly be a risky thing, and we got to really, really, really be careful what happens at 10 a.m. to see if the market reacts at all to it. It might not react, but yeah, we got JP Morgan's earnings call today at 10. Earnings season is here. I think next week we got a bunch of earnings too. Let me make sure. Yeah, we got Goldman Sachs Monday morning, M&T Bank, Bank of America, Citigroup, Johnson & Johnson, PNC, Albertsons, Ericsson, United Airlines, IB, Hancock, More Progressive, ASML. These are all next week's earnings. Alcoa. We got some earnings dropping right now, too, to be honest. We've got Morgan Stanley dropping in about 10 minutes. Let me make sure they didn't release early here for MS. Yep, nothing out yet. We're waiting for MS. But yeah, Boeing next. Or no. Yeah, I'm looking at everything. Thursday. Netflix. Thursday evening, Netflix. Friday, nothing. So honestly, next week's actually pretty freaking slow for some reason. I don't know why. I mean, we got retail sales, we got import exports, Empire State Manufacturing, jobless claims, housing starts, building permits, Philly Fed, Harker speaking, Bostic speaking as well. But it's honestly kind of slow for the next. I don't know if it's the next couple weeks. Let me see this. Hold on. For some reason, the week of the 21st is also kind of slow. Yeah, I don't know why it's so slow next week. We got durable goods. Weird, dude. So the next 2 weeks in economic reports are very slow. So we got a gap in economic reports for basically the rest of April after today. Like next week we got retail sales. We got some other stuff. Not really the biggest day, but it's something. We don't really get some big economic reports until the end of this month on the 28th and 29th and 30th. When we get like jolts, but we do have earnings season here, so earnings season is here. So earnings season is here. It's coming here on the week of the 21st is earnings season. So we got a lot of stuff going on the week of the 21st. We've got Verizon, we've got Tesla earnings April 22nd. Tesla earnings April 22nd. We've got Boeing, AT&T, April 23rd. We've got, it's pretty slow there too, O'Reilly. Yeah, that's not the biggest. We got some airlines, Nokia, Caterpillar, Southwest on the 24th. Intel on the 24th. Honestly, bro, earnings are kind of late this year, dude. Okay, so if they're not this date, they've got to be the week of the 28th too. Waste Management, SoFi, Coca-Cola, PayPal. So most of the big earnings, honestly, are going to be at the end of April. We got like Microsoft, Meta, more. Huh. Would you ever trade your own capital? I mean, yeah, sure. I trade my own capital all the time. Would you prefer a full gold or silver Rolex? It depends. Like Rolexes, it's not about whether it's gold or silver. I mean, a lot of people look at gold and they think, ooh, gold Rolexes, right? But the ones that actually appreciate over time typically are not gold. Some of them are. Like, it honestly, it doesn't matter as much. Okay. Like, I think the logic of that is you have to think about the concept of, like, riches yell, wealth whispers, right? So people that are genuinely, truly wealthy do not want to advertise their wealth like that. And so if they're going to wear a Rolex, they're not going to wear some big, bright, flashy gold Rolex most of the time if they're truly wealthy. It's usually the people trying to look wealthy that wear gold Rolexes. And just to put this into perspective, I have a gold Rolex. I have what's called a bluesy Rolex. It's honestly one of my, I just like the way it looks, right? But the point is, the ones that go up in value, a lot of the time, the upper people do not like gold Rolexes for that reason. And mine's two-toned, right? So it's not pure gold. Like, this is the one I have. But, and again, I keep this thing in a safety deposit box. This thing, but if you want to know what Rolexes go up in value, they have to have a nickname. If they have a nickname, usually they're going to go up in value over time, over long periods of time. And if you look at, Rolex graphs here. This is a bluesy right here. If you look at Rolex graphs, the ones with nicknames typically appreciate more than anything. And so some nicknames are like Batman, Batgirl, Bluesy, Starbucks, Hulk, Cookie Monster. There's like all these different names for Rolexes if you don't know. And the ones that have nicknames are usually the most desired ones, which means they go up in value. There's like Pepsi, Coke. There's all these different names for them. And if you look at Rolex prices, right? Like if you look at Rolex prices, like these are Rolexes since 2017. And so they've gone up in value a significant amount since 2017. And so generally it's up, down, you know, very similar to any other thing. But yeah. Yeah, I'm waiting for, we do have, Morgan Stanley just posted EPS numbers just now. I'll put these numbers up in chat. There's Morgan Stanley's numbers, MS. Yeah, there's MS. Yeah, I mean, it's all about diversification for me, right? Like, I just want to diversify into different things. I don't want to hold one thing and be too weighted towards one thing. I'm trying to diversify into stuff. And I think that's the smart move, is just to buy a bunch of different things, diversify into a lot of different things, different areas. All right, so the U.S. Energy Secretary Wright says that the China tariff hike is the start of negotiation. I don't know what watches you're talking about, B. I don't know. I'm not sure. Yeah. No, I mean, I'm not gonna hedge on the short side with anything. If I wanted to hedge like that, I'd probably just buy gold. Personally, everybody's different though, right? Like, I'd probably just buy gold. But I don't feel the need to, because, you know, number one, I didn't put enough money into where, like, even if I lose all the money I invest, it's not like it's gonna noticeably impact my life. Am I gonna be happy about it? Of course not. But I'm not gonna be like, I don't really gamble like that. I would rather take small positions, hold them long periods of time, let them really pay dividends long term, and versus like taking some huge big bet that I'm trying to brag about online. I don't care about any of that stuff. Oh yeah, I don't even know about the watches. Yeah, you know, my issue is like Tudors are cool. Like, they look a lot like Rolexes, made by kind of the same company. But if I'm going to spend thousands of dollars on, like, I like Omegas better. I'd rather just buy a well-known brand, like a more well-known brand. The only people that really know Tudors are people that are really into watches. And I'd rather buy something like I have an Omega that I wear, like, as my daily watch. Like, I wear that thing everywhere, you know. But I'm just not going to, Tudors are cool, I'm just not going to wear them like that. Breitlings are cool too. I like Breitlings. Options are probably more marketed, CC is my guess. There's just more marketing for options. All right, guys, we got 700 here. We got an hour until this data comes out. So my channel's grown a lot over the past month or two. Feels good, man. Feels good. Appreciate you guys joining me, spending your morning here. I'm trying to provide value, and I think most people can see that I do, right? Like, I give you guys everything going on as soon as it happens most of the time. Yeah, appreciate the love, guys. Yeah, well, the Rolex deep clone or super clones are very, very good. right? Like, honestly, I had a dream last night that I was buying a Rolex from somebody, which is very strange. I don't know what I was like, why I was dreaming, but I had a dream last night. I was buying a Rolex from somebody, and I wanted to take the back off of the watch so I could look at the inside, because like Rolexes, they'll have a very specific tell if they're fake. Real ones will have a free standing balance, so they'll have one balance arm and that's it. The fake ones have multiple, usually stick it out. You can really tell they're fake. If you look at the movement, you can obviously spot that they're fake. Where like a real Rolex will have freestanding balance, one balance arm. But unless you're looking at the movement, most of the super clones for Rolex are very hard to distinguish. Very hard to distinguish. Like when I bought mine, I took the back off every time and looked at it at a jeweler to make sure it was legit, because they're very good. And it's hard to tell on the outside too, you know. I'm not talking about hedging is gambling. What I'm talking about is taking some huge position that I'm afraid of losing is gambling. Not really hedging is gambling. Taking a big position that I'm afraid of losing is a gamble. I would rather take a small position that I'm not so afraid of losing and then be able to kind of remain steady and strong with that position versus taking some huge position that I'm going to be wimpy with, you know. Like, I'd rather take a small position that I'm okay with losing, is my point. I think hedging is smart. Like, hedge if you want to hedge, you know. I think gold is a good hedge because gold's probably going to go up long term anyway. If the market tanks, gold's probably going to rip higher. And, you know, that's a good hedge. But gold's also at freaking 10-year uptrend now. So I'm not really the interested party in buying gold. Although it has gone up regardless. And I think I've just been missing out on some gains for gold. But that's okay. It has grown over the years. It has. Yeah, for sure. I get it. Bored PC guy. You know, it kind of starts. It depends on how much money you make. Number one, like the watches that you're gonna like. Because for me, it started out. My dad's a watch guy. Like my dad's into watches, and so my dad and I would buy each other watches for birthdays and stuff like that. And I remember I had some like Seikos and, you know, a couple like nice Seikos, a couple Citizens, you know. And I loved them. I thought they were great watches. I thought they looked great too, you know. But then once I started to like make enough money, I guess, to justify it, I started kind of wanting to buy some of those nice ones. I started understanding that like one of the things that like wealthy people understand, or, you know, is that you can buy certain watches as a store of value. Like, I could buy a Rolex, if it's the right one, I could buy a Rolex, wear it for 5 to 10 years, and then if I want to, sell it for more than I paid for it. And that's a pretty cool deal, if you ask me, right? Like, and I think a lot of people look at Rolexes like you're just flushing money down the drain. And maybe you are to a certain extent. If you don't take care of it, that's definitely, you know, possible. But I think people also can recognize the value of it, and you can buy it, wear it, sell it for more than you paid for it, make money for wearing a Rolex for 5 or 10 years. That's a pretty good deal, I think, you know. I mean, I don't like wearing them, to be honest. Like I said, I got an Omega that I wear pretty often versus a Rolex, but still, the point remains. Yeah, I mean, I'm talking about investing. I'm not talking about day trading, Jan. Yeah, I like collectibles too. You know, my son and I do Pokemon and stuff like that, so. Yeah, I'm sure there's some really good fakes. And one of my skepticism regarding the luxury watch market is those fakes, because the fakes progressively have gotten better and better and better and better. Who knows what they're going to do now? Like, pretty soon they're going to be faking the movement as well. And they already are faking the movement, but they're going to be faking the movement accuracy with the balance arms. And then it's going to be really sticky, really difficult to figure out, like, if it's real or fake. You know what I mean? Yeah, like I said, I'm not against hedging. I think hedging's a good idea if you're not day trading. If you're investing and you want to hedge, like I said, gold seems like a pretty solid one, but yeah. All right, guys. I don't know what we're going to get today. It depends on what PPI inflation. I mean, we're starting to see some red show up in everything. NASDAQ turning down. Like, NASDAQ's turning down. Slightly green on the day, but we're right at the middle road. Like, we're right at the previous closing price for a lot of this stuff. Nvidia slightly green. NASDAQ slightly green. Apple slightly green, but they're going back and forth. A lot of them are right at that previous closing price level, the red to green level. And so, yeah, we'll see. VIX stayed higher, yeah. Yeah, the VIX currently is at 43s. Yeah, there's Nvidia still at 108s. Yeah, for sure. You gotta, yeah, guy with the microscope. You gotta take the back off and look at the movement now. They're indistinguishable if you look at just the watch. You gotta look at the movement. Crack open the back. There's some small details. Like I have a jeweler's loop. Like I got really into that, like watches for a little while. Kind of an ADHD obsession for a year or so, and so I can usually tell. But you have to have like a jeweler's loop, and you have to look like magnified look into everything fully to see. Even then, it's hard to tell, to be honest. But there's some signs. Yeah, no, the movement's cloned as well in the super clones, right? But there's some look, like the easiest tell is this. Like, if you know what you're looking at, the movement is fake. Like you could tell. Okay, so here's a fake, right? So this is a fake one. Right. So this is a fake Daytona. Okay, anybody that knows Rolex movements is gonna look at this and realize it's fake. Even though this all right here looks legitimate. You know, you need a jeweler's loop to look at it, but it looks legitimate. The fake aspect is these two arms right here. These two arms. Because a freestanding balance is hard to fake. And so a real Rolex will have something like look, let me see if I can find a real one. It'll have something like this. One thicker arm, you know, that's not pinned to it. But outside of that, they look very real. Like, they all look very, very real, you know. And a real one will look like this. A real one look like this. The other problem here, this is probably fake too because it needs blue. Like, this should be blue and it's not blue. And so this one might be fake as well. But the point is, like, you got to look at it, and you know, there's a lot of stuff you got to eyeball for. All right, guys. Hey, so I think we just had another big earnings report come out. Let me make sure. I think we just had another big earnings report come out. We had oh no, we already had Morgan Stanley, Wells Fargo, BLK, JP Morgan. Okay, so all the big earnings are basically done for the day. Tesla dipping down some. Here's Tesla. Look at Tesla right here. Interesting pawn. I clicked the wrong button on the poll. Well, honestly, the poll is pretty split down the middle out of 700 votes. 51% think PPI inflation comes in higher than expected today. 49 think lower. Oh, thanks for the donation, Rich. Appreciate it. Yeah, I don't know. I'm not a big collab guy, personally. Regardless of whether he's bigger, you know, smaller streamer than me. I wish him the best. I'm not really, you know. But who you got, Volk or Diego Lopez? I mean, my heart says Diego, but Volk is just really good. Volk. When was the last time Volk fought? Volk fought last. Volk fought over a year ago last time to Ilya. And he's taken a year-plus break, which I think is necessary. He needs to take that type of break. So I'm going to go with Volk, to be honest. I'm going to go with Volkanovski just because he's taken a long break. That's good. He needs to let his chin heal a little bit. And I think a year and a half or a year and a quarter really is what it is good. I think he needs that. Yeah, we got PPI inflation, producer wholesale inflation. Yeah, Diego. I want Diego to win. But Volk's, you know, it's going to be tough to beat Volk, I think. All right, guys. Tesla down to 250s. Apple at 190. NASDAQ at 18.5s. A lot of stuff just went technically red on the day and dropped below the previous closing price. A lot of stuff just went technically red, dropped below the previous close. See if that data holds. Yeah, Bitcoin, a lot of stuff just went red. Coming down. I want to see if there's any news to make sure. Bitcoin hit 83,000 this morning, 83K. Again, we did have MS earnings. Looking at other stuff too. Wells Fargo CFO says returning excess capital continues to be a priority. Greer says the Chinese tariff reaction is unfortunate. All right, so we're getting Tesla at 250s, Apple at 189s, NASDAQ at 18.5s. Somebody's asking, about housing. Yeah, so let's talk about it. So recently, what we see is we see treasury yields surge because people are unloading treasuries, and yields and treasuries inverse each other. So bonds and yields inverse each other. The underlying price of the bond versus the yield that they pay are inversing each other, or typically inverse each other. There's been a big sell-off in the 29 trillion treasury market, putting a lot of pressure on housing. It was influenced by investors' reaction to policies, including the tariffs. Obviously, the 10-year yield spiked up huge amounts, and I think it's up again today, but it's close to flat overnight. Higher mortgage rates make borrowing more expensive, leading to decreased affordability for potential home buyers. Scenario can dampen housing, slow home sales, lead to decline in house prices potentially. It's transitioning to higher mortgage rates, which in turn negatively impacts housing. And so it's not good. Obviously, it's not good. But, we'll see what happens. Get a little bounce here after breaking under these previous closing price levels. Market crash day 70 or something. Now let's see when the market started to crash. So the market started to crash. A lot of people are going to do, like, it depends. So this is, market started to crash, I would say, the week of February 24th. Week of February 24th. So we've had 7, 14, 21, 28, 35, 42, 49 days or less of market crashes. Right? So we've had less than 50 days. But we've been in a correction crash for the last month and a half, Market's been decreasing, still down a lot, but did have a nice little resurge back up here, so we'll see. But yeah, it's definitely not day 70. It's more like day 30 something. All right, guys, we got 35 minutes before PPI inflation data goes live. 35 minutes before PPI inflation. All right, guys. All right, so let's go a little bit deeper into the treasury sell-off here. The people who are selling the treasuries are foreign central banks and wealth funds. All right, China, Japan reducing their U.S. treasury holdings to defend their currencies as the dollar strengthens. If we take a look at the Dixie here, actually the Dixie's fallen down. Let's just, Dixie's fallen down. Yeah, so the Dixie's actually dumping down here. Bitcoin and other stuff actually going up. Yeah, hold on. So I'm looking at the Dixie. I'm trying to get a little bit more. Tesla at 251s right now. Meta at 540s. Bitcoin up to 83s. Yeah, so the dollar index has fallen below 100, its lowest level in 3 years. It's from the U.S. and China trade tensions, broad sell-off in assets of U.S., including treasuries and equities, shifting towards traditional safe haven assets like the Japanese yen, Swiss franc, gold, growing aversion to U.S. financial instruments amid policy uncertainties. There were expectations that the dollar might strengthen due to interest rate hikes in response to inflationary pressures. All right, so hedge funds were long treasuries expecting prices to go up, but have been forced to unwind positions amid rising yields and volatility, especially after the surprise tariff pause and Fed uncertainty. Interest rates rising. Fed's balance sheet continues to shrink. Quantitative tightening from banks and funds are rotating out of long-dated treasuries to manage risk. The U.S. is issuing a huge amount of new debt to fund the deficit, which floods the market with supply. Government issued more treasuries to cover spending and interest costs. The market demands higher yields to absorb the excess supply. All right, so look at this spike up here in everything except for the Dixie. So something just spiked. I don't know why. Fed's not cutting rates yet, reducing its balance sheet. It's not a major buyer of treasuries anymore. Hey, yeah, y'all go check out Beach Bum's channel. He's doing a live stream this weekend. Y'all go subscribe. Give that man a subscribe. Help support the channel. Mag 7. Well, a lot of stuff just popped here. I'm trying to see if there's any news to justify this bounce. All right, so BlackRock CEO Fink says that this isn't Wall Street versus Main Street. Market downturn impacts millions of ordinary people's retirement. Public markets volatility should drive even more capital flows into markets. I'm trying to see if there's any other breaking news here besides just Fink. ECB wants banks to simplify risks. Yeah, I don't know what the cause of this spike is, but market's just spiked up. Mercedes discontinues their Citan and T-Class models. Yeah, we've been covering bank earnings. Yeah, I don't see anything on the wires either. Tesla rejecting that previous closing price. I don't know what this big pop in everything was. Look at this. But maybe it's just normal flow. Yeah. This might be a technical move. I don't know. Could be stock related news. I'm trying to look at Nvidia. It's not a PPI link. There's never a link. There's never a leak. Most of the time people are just making stuff up, you know. All right, so there's market chatter that OpenAI is cutting back on AI safety reviews in a race to launch their new model. Bank earnings are already out. We already had JP Morgan, Wells Fargo, all that stuff. All right, guys, we still got 30 minutes. We got over 1,000 people watching. Appreciate the love. Thanks so much. So yeah, I wish I could change this. Yeah, gold reached all-time highs. Oh. Yeah, we said Brazilian and Mexican data here, but nothing really big enough to move things. Yeah, I'm looking at Nvidia. Nvidia popping up to 109s. It's been sideways though for a few minutes though. A lot of stuff's rebounding though. Nvidia. It looks like this was a Nvidia driven move. Yeah, just waiting here, guys. We got PPI inflation data dropping in about 30 minutes here. Yeah, it's honestly been really easy to make money for the most part. I'm not saying it's super easy, but it's been easier to make money. All right, guys. PPI inflation data going live pretty soon. Futures turned red. Yeah. E-mini pulling back, Tesla pulling back, Amazon pulling back, Microsoft 384s. Warner Bros. Discovery says Dr. John C. Malone is going to transition to chair of WBD board and intends to nominate Anton. Oh. Is Newswire's getting trolled here? Hold on. Okay, yeah. I guess not. What was the big Satanist name? It was something like this, right? Wait. It's so hard to figure out what's real. Wait. All right, Kashkari says that it's hard to get a read of what's happening underneath. Job is to make sure inflation expectations do not rise. So Fej Kashkari speaking right now. No, there's a different one. Who would name... I mean, never mind. I'm just not even going to go into this. Yeah, well, there's a guy called Anton Levy, Levy, that was just potentially nominated for election by stockholders at an annual meeting for Warner Bros. Discovery. All right, so we did dip down here in Apple, and I think we got to watch Apple really close, but Nvidia's bouncing up some for some reason. Nasdaq still like charting up. I'm going to put up a different platform here so we can trade on both. All right, so again, bear with me, chat. Bear with me. We're going to put up this platform, Top Step X. Here's the Nasdaq 18.5s. We have to draw some levels here. I think that's time. We got to draw some levels. I think that's probably one. Let's see, maybe like here. That's good enough right there. I think we got like another one here. going like here. All right. Bank earnings were mostly good. I mean, if we look at like JP Morgan, let's take a look. JP Morgan's up slightly from the earnings. Wells Fargo up slightly overnight. Morgan Stanley up slightly. So kind of like an underwhelming reaction to bank earnings, to be honest here. We didn't really get a huge reaction or anything like that. And again, if you haven't already, give me a follow on x.com. We cover all the breaking news, sometimes earlier than we post it here. And so if you want to check it out, here is the link. Give me a follow on x.com. We've grown by hundreds of followers in the last week or two. So thanks so much for the love. Give me a follow, completely free, doesn't cost anything. I mean, we're always going to stream live on YouTube. That's going to be our #1 source here for everything is YouTube, of course. So if you haven't already, subscribe here. Hit the notification bell. We do this live every single day for free. Don't charge anything. Don't claim to be good traders. Don't sell a course. Don't copy us. Yeah, the name was so similar to the other guy that I kind of like froze when I read it. I thought that somehow Newswires was getting trolled a little bit. Yeah, Dixie's fallen. Down to under $100 for the first time in years. All right, we got 20 minutes left, still 1,100 people here already. Yeah, I mean, the big news is that they are doing 25% tariffs on the U.S. Look at my support level hold, bro. I'm telling you, dude. Dude, I gotta trust my levels more. Like, we can have haters here sometimes, but they can't even argue with that. Like, look at that. We bounced literally directly off of the level I just drew like 30 seconds ago. You love to see it. I gotta start attacking these levels more. Even if we break underneath it, that one little bounce confirmation, man, can be profitable. I just gotta figure out how to profit from it. I'm excited when it does this, too. Hey, thank you, Sunset. Appreciate it. Yeah, I don't know if Kashkari's moving the market, though. I don't know if he's really a market mover, though. It's the problem. Look at that support hold, dude. Yeah, I mean... see. Where did that person go? I still gotta order some freaking RAM for this computer. Alright, so we're back down here. It's at beginner trades due. It's at beginner trades. Mullen, dude. I haven't heard the symbol Mullen in a long time. It's at 3 cents a share. It's at beginner trades due. I'm not going to post it again. I already posted it. You can either scroll up or it's at beginner trades, brother. All right, so we're in this little baby range right now. PPI inflation we got 20 minutes left until this. We got 1,100 people here. All right, so the president, they say, is poised to pick a fight with big banks over lending for small businesses, according to New York Post, citing sources close to the president administration say that he is going to up in commercial banking by demanding that the CEOs and, more importantly, their deep-pocketed banks places like JP Morgan, Bank of America, and Citigroup ramp up lending to small businesses as a way to jolt economic growth. Yeah, I've always been critical of Mullen. I've always told people in Mullen at 3 cents a share now. Yeah, we got the University of Michigan consumer sentiment data too here. Still holding over that level. Yeah, so JP Morgan CFO says that the China business is performing well and are seeing consumers pre-buying stuff that may get expensive due to tariffs. Consumers are basically fine, end quote. Consumer sentiment is key. Yeah, I think that's a big report. I think the inflation expectations for it is even more important too. The range is very small though ahead of PPI. I wonder if the market's waiting for it here. Honestly, we don't really have like, it's not really a huge like list of reports that we got going on today. Like we got PPI, we got Michigan consumer sentiment data. Still relevant, right? Like this stuff's all relevant, but whether it's gonna move markets is an arguable thing. We got Collins speaking at 9 a.m. too. All right, so here's a breakdown under this level. I kind of want to short this little retracement here. I'll try, but whoa, what a retracement back up here. Hold on, we'll give it a second. Okay, we're actually gonna cover that and get out. That's a big retracement back up. I don't like it. And again, we're green in the account we're in. I just don't want to give too much back here. Look at this pop up here. You never really know what the market's going to do either based off of all this volatility either. We're right at the 200 exponential trying to like hold, but look at this big surge. Still popping up big. Still move it up. Let's see if it holds. It's such a choppy market, though. It's hard to figure out what this is going to do. There we go. Started to flush, and then it came back down. All right, Greece intends to pay off the first debt crisis bailout loans. All right, so we went up to this level. Look at that. We tapped this 586 level that we had on our charts too. So this little range is working. This one faked me out a little bit, but it's $15. What I noticed is like I do much better after the opening bell usually. Takes a brave man to short bullish momentum. I mean, I don't know. We're kind of sideways right now. I don't know if I'd call this bullish momentum. I mean, this is definitely bullish. You know, and I think we got 15 minutes until PPI inflation, and so we might get choppiness leading into it. I just didn't think it would be this sideways of a range. And I think honestly it might still work. It just depends on if we break down underneath it. Either way, it's a very small. If CPI is lower, ideally PPI also lower. Maybe. Doesn't necessarily always turn out like that though. It really doesn't. Like it can vary big amounts. JP Morgan CEO Diamond expects to see if more companies withdraw earnings guidance. See, that's actually some big news too. So look at this report. And this is something that I've seen with a lot of companies. They're withdrawing guidance based off of the tariffs. They don't know what's going to happen, and so they are apprehensive to give guidance numbers. I've seen this with a number of different companies over the last few days. I don't know if it's going to go bearish or bullish. I really don't know. Right now, we're kind of in a sideways market. So we've kind of gone like this. Now, it might push up. We're not in anything anymore. We're flat. In one account, just to give you guys my current P&L, in one account, we are up $52. In the other one, we are down $15, $16 roughly. So we're kind of neutral and sideways. And I'm too nervous that we're going to keep chopping until PPI data. Yeah, look, and then here comes. So I just don't know what we're going to get. It's very sideways and neutral. Yeah, I'm looking at NVIDIA, E-mini. All right, so here's that downward push, but we're right here at another thing to watch, right? One of the reasons I watched the 200 EMA is this level here. Like, we've rebounded back over it. One of the reasons I shorted here is because it was kind of a breakdown of the 200 exponential. Now, every trade's not going to go out, but here goes the downside action. Yeah. But again, we're kind of in this such a tight range, and we have 12 minutes before PPI that I'm not really confident either side right now. Yeah, the tariff news kind of making things crazy. We got 11 minutes before PPI inflation data goes live. This looks weak, but too sideways of a range to attack it again, I think. Still falling down, breaking down. Let's see if we can actually rip under this level here. Nope. Yeah, looking at rate cut expectations. Honestly, the odds of a rate cut have gone up to 30% right now. 30% odds of a rate cut, 70% chance of a pause by the FOMC rate decisions. So it's still pretty probable that we're going to pause, but the likelihood of a cut has gone up. And I think today's inflation data is going to influence this as well. Yeah, very sideways range leading into PPI inflation. All right, guys, we got 10 minutes, 1,500 people here. Hit the subscribe button, hit the notification bell. Also, guys, if you want to check out one of my sponsors, check out TopStep. Great way to learn how to day trade. Most day traders lose. And so if you put up your own money, you're probably going to lose it if you learn day trading in the beginning. Most day traders lose. And so instead of funding thousands of dollars in your own account trying to look cool, try TopStep. Great way to learn. Ignore what the haters say and honestly check them out. It really makes sense to like learn how to day trade this way. I lost $5,000 I can't remember how much it was in my first couple weeks learning day trading. Don't be like me. Limit your risk. Try this. They give you a 50K demo. Comes with real-time data. If you can make 3K in profit on that 50K demo for the base one without losing 2K first, 3-to-2 reasonable ratio, following their rules, they fund you 50K with a 90% split. Prior to the split kicking in, you get to keep your first 10K in profit. Very similar to funding your own account in terms of split, so forth. But if you lose that account, you're out $50 basically. It's not the end of the world. And then they give you a practice account even if you lose to trade on and practice on with real-time data so you can learn and get better. This teaches you how to trade in a really structured way, allows you to learn. And if you're good enough as a trader to pass the test, you can then withdraw with a 90% split and fund your own account. If you fail, you're out $50. And most people fail. Most day traders lose money. It doesn't matter where they go. Most day traders lose. It's a lot cheaper to lose here. Great resource for trading. They've been around for over 12 years. They've paid out almost $200 million. And in the futures market, you can day trade the S&P, the Dow, the NASDAQ, the Russell, gold, some currencies, very similar to day trading stocks. It's just a great way to learn when most day traders lose. But again, I am the top 3 most biased day trader of all time ever in the world. They pay me money, so I am biased. Genuinely useful, though, in my opinion. But if you want to check it out, here's the link. Great way to help support the channel. Understand CFTC 4.41, hypothetical or simulated performance have limitations. Not an investment professional. I'm not liable if you lose money. Make your own assessment. Trade responsibly, guys. Yeah, the new dashboard is dope. It's cool. All right, so now we're retesting this low again here. I want to short it. I really do. We got 7 minutes, 8 minutes left, though. Do I want to short this retracement? No, I don't. I think it's going to break down here, but who freaking knows, man. I'm going to wait. Bitcoin up big today. Okay, I was right. I should have shorted it, guys. I thought it would break. I should have shorted it. Boo. It's all right. Honestly, we're so close to the data release. I'm just going to wait until the data comes out. PPI is expected at 0.2%, 0.1% for core, I think, right? So what about the shorting bullish momentum, Prime? What happened there, bro? Yeah. Honestly, I think if we zoom out, we're honestly in bearish momentum here too. Of course, I'm just joking with you, Prime. But we break down, pull back up. I think, you know. Yeah, I should have shorted this retracement, which is what I really wanted to do. Like, sometimes what I'll do is, like, if you see a big candle like this, and you see a big retracement, meaning like the candle was here, the next candle like turned into this, I will short this and look for the next candle to fill that gap. If not, this candle to like fill the gap on the downside. You know, like that's kind of, get your mind out the gutter, guys. But no, that's what I'll short. I'll short big candle wicks. So if it's like this, I will short that sometimes. Very quick scalping like strategy, but I'll do it. All right, guys. Hey, we have 5 minutes left. 5 minutes left. How do you draw lines of support and resistance? Like that? Or like this? Like, really, I just look for, on a serious note, I just look for confirmations. All right, guys. Hey, we have 4.5 minutes left until PPI inflation data goes live. 4.5 minutes left until PPI inflation data. We also have University of Michigan consumer sentiment. We've got bond prices going down, just technically red in pre-market, which means yields are rising again here. Morgan Stanley CFO says there was deleveraging related to equity trading, but clients continue to be active and engaged. Witkoff is going to meet with Russian press. PPI inflation data is in 4 minutes, about 4 minutes. All right, guys, we got 4 minutes left. Exactly. Very flat market here. Optimism. Bullish or bearish for PPI data in 3 minutes, 3.5 minutes. 52% think higher. All right, guys, we have 3 minutes left. Chat, 3 minutes left. All right, guys, here we go. We got 2,000 viewers right now. Hit the subscribe button, hit the notification bell. We appreciate it. Thanks so much. Again, we got University of Michigan consumer sentiment, so stick around today because we honestly, yeah, we got University of Michigan consumer sentiment and inflation expectations going live today at 10 a.m. We're going to stream that live as well. 2.5 minutes here. Again, expectations you can see on the yellow side of the screen in big, bright yellow letters. They are expected at 0.2% for regular, 0.3% for core, which excludes food and energy prices. Here we go. I mean, I don't know how much these are going to move markets. I really don't. We're going to cover it, though, like we always do. But 2 minutes. 2 minutes left. All right, guys, we got a minute and a half left. All right, guys, here we go. PPI inflation data, 1 minute. 1 minute. All right, guys, here we go. 40 seconds, 40 seconds. Subscribe, hit the notification bell. Thirty seconds. 30 seconds. Hit the live button next to the play button. Make sure you're fully caught up. This timer's a little bit early. Hit the live button next to the play button. Make sure you're fully caught up on the stream. We got 23 seconds. 23 seconds. 20 seconds left. 20 seconds. 15 seconds left. 15 seconds. We're going to do a countdown. Here we go. 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. Here we go. PPI inflation data showed up at minus 0.4%, guys. Minus 0.4% versus 0.2% expected. Minus 0.4%, chat. Minus 4.4%. Minus 0.4%. Wow. Again, versus 0.2% expected. Core PPI ended up showing up at minus 0.1% versus 0.3% expected. So better than expected inflation data. Better than expected inflation data. Again, minus 0.%. Oof. Yeah, minus 0.4% for regular PPI. Minus 0.1% for core. Versus 0.3% expected, or what? Or it was 0.1% expected, right? Wow. Yeah, so again, way better than expected inflation data. Market's up a little bit here, hasn't really moved. Again, core PPI showed minus 0.1% versus, again, a 0.3% gain expected here. Year over year, 3.3%. Wow, way lower than expected. Way more negative than expected here, too. Again, we're covering this on screen. Markets reacted positively to it, too. Wow. Way better. We'll put this up on screen here. But yeah, better than expected inflation data today, chat. Better than expected. Much more negative than expected. And that's good, obviously. This is inflation. This is wholesale inflation here. So this is better. We'll put this up on screen, but better than expected. Yeah. Minus 0.4% versus 0.2% expected. Core. Honestly, the market hasn't really reacted huge to this, though. Still green, but not a huge move or anything like that for PPI inflation. Yeah, the volatility of modern markets is not really causing much of a move here. Good inflation data, though. I'm glad to see it. I'd rather see lower inflation data than higher, that's for sure. You know, so again, we got University of Michigan consumer sentiment and inflation expectations going live at 10 here. So just be ready for that as well. We are popping up, though. I mean, we're green, but it's not a huge green action. It's not a huge green move. And again, stick around. We are going to trade live at the opening bell. We are going to cover University of Michigan data at 10 a.m. today. So stick around. We're going to cover it. Drop it live as we always do. Is it time to buy or sell? I'm going to end this poll right now, and I want you guys to vote on the poll. Is it time to buy or sell? That's all I'm going to say. That's the poll. Is it time to buy or sell? Yeah, let's see the rate cut odds here. Rate cut odds are still under 30% for rate cuts next month. Under 30%. Vote on the poll. We got a poll live. Again, if you want to check out Top Step, great way to help support the channel. No PDT in futures. They give you a demo, test your skill. If you want to learn day trading, taking this structured environment subscription makes sense. They give you a 50K demo. If you can make 3K on it without losing 2K first, following their rules, learning how to trade in a structured environment, they fund you 50K, 90% split. You get to keep your first 10K in profit as well. There's a huge rip in markets right now, huge rip in markets. But if you fail that, you lose 50 bucks. They give you a real-time practice account to learn on afterwards anyway. And they paid out almost 200 million. Futures market very similar to day trading stocks. Patterns are very similar. But this you're risking noticeably less. The base one, your risk is 50 bucks a month. Check it out if you want to look into it. They're an affiliate of mine, though. I am biased. Always remember, not an investment professional. I'm not liable if you lose. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. Markets pop it up. A little bit of a delayed reaction here to the inflation report. A little bit of a delayed pop here. Wow. Let's see if this is news driven. Yeah, so again, and again, guys, inflation data, lower inflation data should increase the odds of rate cuts, not decrease it, because the Federal Reserve is not going to cut interest rates if inflation's a problem. And so lower inflation is actually better for rate cuts, not worse, right? Like lower inflation, I see some people kind of missing this point. Lower inflation means that the Fed has more of a green light to cut rates, not less, if that makes sense, right? Like if inflation's out of control, the Federal Reserve has to worry about bringing interest rates down because that might make spending go up. Lower interest rates might make spending get worse, not better. And what does more spending cause? Inflation, potentially. And so lower inflation is actually better for rate cut odds. But at the same time, though, the market has not been acting in a sensible way here. Bond yields have opened up higher than expected at 4.4%. And so sometimes the market's just nonsensical. Yeah, so PPI out, market delayed reaction, got up to this level here and then rejected. Let's see if it continues to hold here, chat. Whew. Again, PPI inflation data shows low numbers here. Fed will have to raise rates soon. PPI is far below expectations. It does not bode well for economic activity. Yeah, but all of that stuff means more likelihood of rate cuts, not less. Meaning, like, okay, if the economy's weak, the Federal Reserve is more likely to lower interest rates. If inflation is under control and lower, not higher. If inflation isn't high, Fed's more likely to lower interest rates, right? Because again, when does the Fed not want to lower interest rates? If the economy's booming, they don't need to lower rates. If inflation's a risk or a problem, lowering rates might make things worse, not better. And so they're less likely to lower rates in that situation as well. And so, again, a lower PPI inflation data is going to increase the chance of rate cuts in a normal market. Now, this market is far from freaking normal. It's just far from normal. Hey, bro. Love you, bud. Have a good day at school, dude. You doing okay this morning, bro? Love you, buddy. Hey, come here, bro. Look, all right, guys, hold on. Love you, buddy. Yeah, market's far from normal. And honestly, we're reacting positively to PPI, and I think the market wants rate cuts. And so in this regard, it's good in some ways. In this regard, it's good in some ways. But, like, we also have to be careful. All right, guys. Sorry, I had to deal with some. All right, so look, we're rejecting right around this 650 level. We'll see what the market wants. Yeah, so again, I'm looking into the report right now. Again, minus 4.4%. Minus 0.4%. We're going to dig into all this report here to figure out like a summarization of everything. So just bear with me, guys. Bear with me. All right, I love you. Have a good day at school. All right, guys, so let's talk about March PPI data here and like what's going on. PPI dropped 0.4% in March, seasonally adjusted, the largest monthly decline since 2023. Over the past 12 months, prices rose 2.7%, showing modest wholesale inflation. Core PPI just rose just 0.1% and 3.4% year over year, a sign that underlying inflation is cooling but still sticky. Wait. The core PPI came in at a negative number, but that's all right. We'll still look at it. Energy prices dropped 4%, led by an 11.1% drop in gasoline. Food prices dropped 2.1%. Chicken, eggs, and beef prices went down. Final demand goods fell 0.9%, which drove the overall market decline. Final demand goods fell almost 1%, which drove most of the overall decline. Service prices dipped 0.2%. Unprocessed goods fell 4.1%. Intermediate services costs fell 0.1%. Wholesale inflation cooled sharply, especially due to energy and food. This supports the Fed's wait-and-see stance and could ease pressure on rate hikes. Core wholesale prices are still rising year over year at 3.4%. showing inflation is not totally gone. Markets may cheer this number, especially after recent volatility from tariffs. So that's a breakdown of everything going on in the PPI report. And so, yeah, that's kind of a breakdown. But still 3.4% for core year over year, 0.1% rise in food, energy, and transport core. So, yeah, like, you know, less pressure on rate hikes, more potential rate cuts this year. But we don't know. We'll have to wait and see. And that's what the Fed's saying, too. Like, we got to wait and see. The interesting data will be University of Michigan consumer sentiment as well. And you guys stick around. We are going to day trade live at the opening bell. Bond yield's kind of flat. All right, so we're going to give a full breakdown into the PPI inflation report on our x.com page. Yeah, so again, we're going to give a full breakdown here. Yeah, so we're going to give a... All right, yeah, so we're going to give a full breakdown here. All right, so we gave like a full post breakdown into the PPI report. If you want to give me a follow on x.com, here is the page showing it. Market's starting to turn down here. If you want to check it out, there's the link right there. Look at the market start to dive down. So the ECP is reportedly against BNP. See if we got any reason for this drop. All right, so look at a decrease here. We're hitting that 200 exponential. China also said earlier that it's going to ignore the U.S. if it keeps imposing tariffs, and it will ignore U.S. further tariffs. I don't know, bull trader. I'm not sure if that's good or bad, brother. I appreciate the donation. It might make fears worse and stroke more fears, to be honest, but I'm not sure. That's a different market, different subject. I'm not really sure. I appreciate the donation, but yeah, I don't know if it's good or bad. We'll have to wait and see the market reaction to it, to be honest. I try to tell people when I don't know something, and that's something I'm really not sure if it's going to be good or bad. It's hard to tell. Really nuanced. Hope that makes sense. Do you think mortgage rates will go down this year? This year, maybe. It depends on what happens, though. There's a lot of unknowns this year. We're still pretty early in the year. Do I think they're going to go down soon? No. Hope that makes sense. Yeah, I really don't know. report is good. Well, the report is good-ish. The year-over-year number is what is scaring a lot of people, I think, despite the lower than expected month-over-month reading. I mean, most of them were lower than expected, but like when you look deeper into it here, like PPI month-over-month minus 0.4%, that's good. PPI year-over-year still at 2.7%. Core PPI year-over-year still at 3.3%. The PPI excluding food, energy, and transportation, though, showed up at 3.4% year-over-year. 3.4% and 0.1% on the month. So we're not out the woods yet. We also have Fed Collins speaking in about 13 minutes. And so we're not out the woods yet. It doesn't mean too much. Just be careful. Yeah, and like the other thing this mirrors is economic weakness, right? So lower than PPI inflation report might be interpreted as economic and you know, job weakness. And so that might cause problems as well and stroke fears in markets. And the markets are not always sensible and logical. We could have lower inflation, market goes down. Higher inflation, market goes up. Good earnings, stock goes down. Bad earnings, stock goes up. It's not always a sensible reaction, and that's kind of what we're seeing now. We're starting to see a decrease in NASDAQ. Yeah, looking at gold. Gold's been breaking all-time highs here. And gold's getting very close to all-time highs right now. It's at 32.44s as we speak, 32.44s. Well, I mean, these are all good for lower interest rates, right? Like weaker economy is better for low interest rates. If the market wants lower interest rates, it kind of needs a weaker economy to justify lowering rates, right? If not, they're just going to keep rates the same if the economy is moving. But lower inflation does equal less, less worries about cutting rates. It doesn't mean the Fed's going to cut rates, but China doesn't budge. 145% tariffs on everything we buy would be devastating until we're not prepared to make all that stuff here. Scary times, but I understand why we must. Yeah, I mean, I appreciate the donation. Thanks so much. Yeah, I mean, scary times for sure. Yeah, stoke fears. Sorry, I'm using the wrong word. I'm trying to say it quickly. No, I understand. Stoking is like this. Sorry, wrong word. Yeah, I'm trying to talk quickly, and yeah, you're right. I'm wrong, using the wrong word. Absolutely right. Fed follow the 2-year bond. They don't have real control over rates. Fed demanding 2% is a little, yeah. Short SPY at the open. I don't know, man. I'm not confident. The market's still pretty sideways here. And the AI market decline begins. Yeah, I mean, it's already been declining, though. NVIDIA down to 108s from 150s. Irregardless. Yeah. Yeah, irregardless of whether irregardless is a word or not. Stroke is a word. I just used it in the wrong way, you know. Irregardless is not a word. Honestly, markets are very sideways too here. Like, they're not really moving a lot this morning. To be honest, EB, I would say it's fair, considering I've been critical of the word irregardless a lot. It's a pet peeve of mine. I think I think using irregardless is a pet peeve because they use it to try to sound like regardless doesn't sound as smart if you didn't understand that irregardless isn't a word. Regardless doesn't sound as smart as irregardless, right? Unless you know that irregardless is not a word, and then you just kind of, you know, I don't know. Top 3 least believers in the word irregardless in the world right now. Tesla now technically red on the day. My point here is I probably deserve it. Apple at 189s, Microsoft at 383s, Nvidia at 109 still. Amazon all the way down to 180, but it's a waste of a syllable. Yeah, exactly. Yeah, I'm not superstitious, but I'm definitely pretty stitious. You know, that's all I'm saying. Yeah, but I think you could also, like, use weary. I think it's kind of like mind-boggling or mind-boggling. I'm a mind-boggle person. But I think, like, weary is defined as feeling or showing tiredness. And so you can be weary regarding stocks, weary regarding Apple if you're tired or exhausted from looking at it. You know, so, like, the context is a little bit more valid than other words. All right, guys. Hey, 7 minutes until the top of the hour here. 9 a.m. coming soon. Do you buy here? Do you short the breakdown? I don't know. Looking at our poll, 61% says it's time to buy. 39% think it's time to sell here. Yeah, we got the University of Michigan Consumer Sentiment Report going live at 10 a.m. today. I'll put that up on screen now. There we go. PPI inflation expectations going live. JP Morgan CEO Diamond says the odds of a U.S. recession are at 50%. 50%. That's not good. 50%? That's high. No? My Friday's pretty good. I mean, Fridays have a positive bias for going higher. Do you agree? Maybe. Yeah, I actually think AI is in the dictionary now. Yeah, I saw that one. Eck. You're not that old. Use words like base facts. Let him cook. But see, it changes all the time. Like, I was talking to my jiu-jitsu coach about brain rot terms, you know? Like, I'm surprised I haven't seen a young guy come into the jiu-jitsu and be like, that's skibbity toilet jiu-jitsu, you know? And so the words change. Like, bussin' was cool, and now bussin's not cool, and then, like, cap is still out there, I think, but then there's also, like, skibbity and sigma and, like, all the brain rot terms. Now it's like cook, but cook is used in a lot of different ways. Like, let him cook is good, but I'm cooked is bad. And then, like, it just gets really complicated, I think. And so, all right, market's falling down here, Chad. Market's falling down. Under 18.5s, which I think is a pretty big psychological level right here. Yeah, I mean, the thing, we need 2 consecutive losing GDP quarters to technically be in a recession, and we don't have that yet. So... Again, subscribe, hit the notification bell. We got to be pretty freaking close to breaking 160K subs. Let's see where we're at. Yeah, we need like 600 subs to break 160,000. 600 subscribers. So lower PPI means economic weakness, meaning lower interest rate sentiment. It should, but bond yields are higher. Most likely from people unloading treasuries. Like, bond yields go up as treasury prices go down. When people sell off treasury prices go down, yields go up. Although interest rates and yields have a positive correlation as well. So, like, in theory, lower inflation should mean more of the green light to cut rates, not raise rates. But interest rate sentiment is still increasing because the market's just nonsensical right now. Yeah, no, the only Fed members I stream are, like, I'll cover their quotes, but I'm not going to stream them unless they're Powell. We keep it Powell-centric here, you know. Yeah. Market's still flushing down. I'm looking at this level here, this 460 level. Gold, look at gold. Gold's about to break all-time highs here. Look at gold right here. You called the drop yesterday? Still think we dropped today? I don't know. Today's less predictable. I mean, it's not a shock. Like, the reason I was able to call the drop yesterday early in pre-market was because of, like, okay, the market ripped up 12% in a day, right? Like, it's not a shock that the market did something like this and then did this, right? Like, even if we continue going up, this is still pretty probable. Like, we're not going to go straight up, you know? And so it's not super unpredictable in that situation. Like, you can kind of look at it and understand, hey, we're up a lot. We had one of the strongest green days ever. It's probably going to be followed by like a red day. And then maybe we could go back up. Maybe we go back down. But I guess the point is having a red day after a huge green day is pretty common. I called the circuit breaker yesterday. The market makers won't allow it to happen. .48%. Yeah, the 10-year treasury, look. It's right here. It's this chart right here. It's at 4.9. yeah, 4.8 or 4.48. I mean, yeah, it's high. It's going up. Yeah, I don't know what the market does here. I really don't. I think look at this red. We're shorting this red in our other account here. I guess I'll show it to you guys. We're up about 130 here in this account. Yeah. So here's the account we just made. This is my trading on the day so far on this account. We've been kind of trading off stream a little bit because it's easier. But we have had 1, 2, 3, 4, 5 losses out of 20. So we're running about 75% accuracy here. But we're up about $138 in this account. We might use it to take more risk. Yeah, so China said this morning it no longer makes economic sense if U.S. imposes more tariffs. Yeah, they're both kind of doing it back and forth. Honestly, I think both countries are just a little too aggressive here. Neither one of them wants to look weak, and they're just kind of going back and forth, like back and forth. Neither one of them wants to look weak, and it's just kind of pushing us deeper and deeper into fear. The VIX is at like what, 40 still? Yeah, 43s. So the VIX is still flying up. Bond yields are rising up. Treasuries are getting sold off. When do you personally stop trading? I have a problem just sitting and losing my gains. Well, I think it depends, right? Like, you can have two different approaches. You can be green on the day and look at tariffs, or look at yields up to 4.82% or 4.482% now. I don't know. I think you could use two different things. You could take small gains and sit on your wins. And I think it depends on where your account is. Or you can make money if you're up 300 on the day. You can take larger risk and then end the day break even. Right? Like if you have a problem giving back your gains, I think it's okay sometimes, depending on the trader. Like, not an investment professional, not liable if you lose. But I think it's okay, depending on the trader, to like build up some profit and then trade that profit, if that makes sense. Right? Like build up some profit, trade that profit, focus on that profit. And if you do end up break even, it's not the end of the world. That's okay. As long as, like, if you do have big days where you're up a lot, you protect that. All right, guys, we're up to 4.48% here, and yields 4.48%. All right. Dude, my beard does look red. I look Irish here. Like, bro, I'm really not usually, like, my hair's not red in real life. But I'm noticing, like, maybe it's the glow of the stream that it kind of looks red. Like, see, like, my hair's not red. It's brown. I don't know why it looks red on stream. Everybody's saying I'm Irish. I don't know why. Apparently I'm ginger on stream, guys. Paul Felder, yeah, the Irish Dragon. I'm thinking about Paul Felder. It's just weird. Sorry, I'm making myself big so you can guys, like, so people can see I'm not Irish. I like the Irish. The Irish are cool, but still. Bond yield still rising. All right, back to our regularly scheduled programming. 18.5s right here, testing 18.5s. Most Irish man, definitely top 3-ish. You're a ginger, Harry? I guess so. Scottish? I mean, my last name's London, London, so it's plausible I am Irish. I actually am a little bit Irish, but not red hair Irish. Like, my last name is London, my middle name is Nordic. All right, so here we go. We're breaking down. We're at 18.45s. Look at this fall. Let's see if there's some news here dragging this market down. All right, JP Morgan, CFO, not seeing signs of distress in low income. Treasuries just hit 4.5%. Maybe that's why. Treasuries just hit 4.5%, chat. That might be what's dragging the market down. Fed's Collins says her outlook for the year is higher inflation and slower growth via Yahoo Finance. This is why the market's going down right now. Collins is speaking. She says her outlook for the year is higher inflation, slower growth. Markets are falling. Yeah, my mom's blonde hair, blue-eyed. My dad is dark hair, dark eyes. You know, so. All right, look at the NASDAQ fall here. We're falling quick, too. All right, 18.4s, bond yields. Gold testing all-time highs here, chat. Gold is testing all-time highs right now. Nvidia turned all the way down to 108s. Yeah, I mean, I know you're kind of trolling, Kevin, but there's a big difference between perma bear. Perma bears are the biggest losers in finance. This is just a 2-month bear, you know, give or take. Like, we're really, honestly, if we're looking at the NASDAQ here, we are only where we were in May of 2024. So we didn't even retrace a year. Again, let's take a look at gold. Breaking all-time highs. Gold just went up to 252s, 3253s or so right now. Still got a couple dollars to go before it breaks all-time highs, but it just tapped it. Just tapped right off of it. All right, so we're still coming down a little bit here. Yeah, I mean, the NASDAQ, if we look at a year ago, we're about right where we opened up a year ago. Just about right there. We're about the same price we opened up. We opened up a year ago at 18.3, 18.184s. We're at 18.3s, but the high of that first day was 18.5, so it just depends on where you count it. All right, look at the NASDAQ coming down more here, though. Wow, look at this drop. All right, look at this tap off this level. Top 3 greatest level of all time ever in the world. Greatest level of all time right there. Look at that level. Yeah, dude. Look at that level. 359, 360. Greatest level potentially of all time. Pawn, I haven't even opened Discord yet. I just forgot about it. My bad, bro. Pawn's probably sending me stuff. I haven't even looked. All right, so it's still testing that 360 level. I know, I left you on red, or on red. I'm sorry, Pawn. Options before 8:30? I mean, you mean Central Time? No, not really. All right, guys, we are at 18.39s. Kind of weird, dude. Sorry, I'm like there's different people that like I watch grow that are like smaller channels, and like some of them I support, and like others I don't. Right, the ones I don't typically support, like if you're doing exactly the same thing as me, I'm not about to plug you, and that should be pretty understandable. I'm not going to build my own competition for the exact same thing, especially like if you're watching me do it and then you're just trying to like mirror exactly what I'm doing. Like there's just no point in me promoting that. Like I want anybody to grow. If somebody's doing something different, like Beach Bum is a good example. Great channel, swing trading content, a little bit different than mine. I'll plug him every time he comes here and asks for it. Like I want to help other people grow. But the problem is that like there's certain people that will like ask me for support and they ask me to collab and they ask me for all this stuff, but like they're copying exactly what I do. And some of it is just incredibly unhealthy. Like some of it, they're copying me so much. And I guess imitation is the best form of flattery, right? I'm not going to be specific, like really small channel. You guys wouldn't even know it, but they're copying so much. You can tell it's just super unhealthy. Like it's not healthy to be this weird with me about it, like and obsessive about it. Like they're copying very strange things. I can't really give more context to it, but it's unnerving. I'll put it that way. It's just odd. Like, good news is bad news. Bad news is good news. Yeah, I think right now, I think good news is bad news. Bad news is bad news right now is what I think it really is. I think right now it's not good is bad and bad is good. I think bad is bad and good is bad. Right now is what I think. I think economic growth is seen as inflation risks. Economic weakness is seen as economic weakness, right? So, like, I think good is bad is bad right now. Half the country wants the market to fail. Yeah, I mean, that's kind of pretty similar, though, on either side of the political sphere. They're both like that. One side gets power, the other one talks about how bad they're doing. The other side gets power, the other side talks about how bad they're doing. That's pretty normal, standard, predictable. It's a pendulum. Yeah, no, this one's not even funny, Pawn. This one is just genuinely, like, unhealthy. Like, unnerving, unhealthy, just freaking weird, you know? Like, be your own person, man, you know? Like... Yeah, Beach Bum's great. I like Beach Bum, to be honest. Y'all are like my therapist here, guys. Therapy. Inflation has nothing to do with the economy. They print money because they can. I would. Yeah, I mean, they print money typically like with quantitative easing terms whenever economics, huge risk. They're still doing QT, which is the opposite. Yeah, PPI was actually negative. It came in at minus 0.4% versus 0.2% expected. Let me fix this as well. Look at this level, though. We came right down to this level, so I got to learn to play off of these levels a little bit better. We got 9 minutes left, chat. 9 minutes. We're going to trade the open live, as we always do. All right, NASDAQ down to 18.4s. Yeah, if you want to check out our Discord, it's completely free. It doesn't cost anything. A great way to help support the channel. You can check it out there. In 8 minutes, we got the opening bell. Yeah, I did a poll. Is it time to buy or sell? 58% say buy, 42% say sell. All right, so we are rebounding back up. The question is, do I want to short this 460 level? 460. Wild Friday. Uh-oh, we got the saxophone this morning. All right, there's the 460s. Bond yield steady pushing back higher. Yeah, this is classy in here. I would say this is the classiest song ever. Fits me. Top 3 classiest person on YouTube right now. No. All right, I should have shorted 460s too, man. Look at this. Ugh. I should have called it. Look at that. 460 short was there too. All right, so we're going back up to 460s. I'm not going to do the retest. I never attack here because the retest typically is less reliable. Yeah, hindsight. It's still too early though. Like we might go. I don't ever do the retest. Like I'll attack this little breakdown here because we got enough ticks to capitalize on it, but the retest is less reliable, so I'm not going to mess with that. Got like, you know. I want to learn to play the sax just so I could, you know. Saxophone players, man. I just shorted at 5,000 on the S&P, closed at 448. That's pretty good. All right, so we did reject at 460 again, dude. Honestly, at 460 level. At least we know a good level to pay attention to. We got 2.5 minutes left. 2.5 minutes left. All right, guys. So we did reject 460s. All right, guys. We got the opening bell coming soon. One minute. 1 minute here. All right, guys. So we're still down. All right, there's the opening bell. There's the opening bell. All right, let's see what we get. Bond yields right under 4.5%. Gold at all-time highs at 32.50 or so, 32.50. We got Tesla pushing up to 252s right now, 252s. Bonds rising, Microsoft rising. Markets rebounding back up a little bit here. All right, look at this big pop. Again, we got the UMich Consumer Sentiment Report at 10 in 2 minutes. All right, guys, so we did reject at 460s again, although we did pop up a little bit at the opening bell. Still too early. Tesla over 253s. NVIDIA at 109s right now. So, again, I'm waiting here, chat. I'm not really interested in attacking anything big. Here's Apple. I'm going to wait and let the dust settle from the open first. Gold's still creeping up, though. Look at gold. All right, so market's starting to turn down here, still rejecting that 460 level. TLT Bonds decreasing, yields increasing still. Market's turning. Gold just broke all-time highs at 32.5670 just now. 32.5670 for gold all-time highs. All right, testing that low. We are at the opening bell here, though. We're 3 minutes in. Still battling this 360 level that we have on our charts. I gotta wait at least a couple more minutes to trade, but I'm getting kind of the itch to. Yeah, I'll put a timer up for the University of Michigan data. I don't know if it's gonna really have a big influence or not, but so we're still testing this downward push. Very choppy open. I don't know if the markets are waiting for the Michigan data or not. All right, BlackRock CEO Fink says we are close, if not in a recession, according to CNBC. President tweeted, "We are doing really well on our tariff policy. Very exciting for America and the world. It is moving along quickly." Still in this range, though, to be honest. Michigan data is in 25 minutes. 25 minutes. We'll put a timer up. All right, so we went to the top of that 460 level. We got to wait for this range to break that we have here. All right, so here's the timer. All right, look at this big surge. All right, we got a little pop here. Still rejecting at 460 though. Apple's moving up some. What a drop. What's falling right now? Microsoft. So rejecting at 460 again. Again, very tight opening range for the opening bell here, guys. Very tight opening range. What's up, Tiny? Yeah, all good. Always good to take a break if you don't have the mental capital for it. Again, y'all subscribe, hit the notification bell if you haven't already here. We're getting very close to 160,000 subs. My levels work though, man. Like, people can say whatever they want, but look at these levels here. Honestly, I think it's kind of ironic. A lot of the people talking smack are probably kind of copying off of the levels. NASDAQ at 18.4s. Yeah, it's a good lesson, Tiny, for sure. Better than me sometimes, honestly. You guys know me. It's hard for me to sit off market. I do okay with it, but like, I wish I could do better for sure. Bond yields falling down still here, guys. So bond yields are decreasing. Yeah, I like the levels. I changed it to yellow so for people on the stream too, so they can see them. I had them as blue and people would miss out on the levels, but I don't really want people to copy me. With that said, I'm waiting for this opening range to break, but sometimes you'll get an opening range break and then you'll just dump the other way too. So like, here's the opening range test. Just broke the opening range. Let's see if it means anything. There's the opening range break. Liquidity grab. Maybe. Apple going green on the day. Gold broke all-time highs as well. New all-time highs on gold are 32.62s here. 32.62s. Bond yields decreasing. Bond yields are increasing. Bond prices are decreasing. TLT and other bonds are going down, not up. That means bond yields are rising, not going down. All right, so the opening range broke here. Look at that pop. I don't know if I like this yet. I'm going to try to buy this here. Small little trade. I just made about $20. Yeah, just made about $20 here. Small little scalp. We'll see if we can... Alright, so look at the turn that we got. So we're back in that opening range here. And this is what I said. Sometimes we break the opening range and then dump the other way. I'm going to short it to this pop. I think so. We'll try it. There we go. There we go. I'm going to go ahead and cut that. Just made about $40 or 30 something dollars there. Yeah, when you're right, you're right. So I didn't attack the long there. It's too easy to get faked out by like market makers, price action, all that stuff. Once you get back in that opening range too, it's plausible that you're at least going to get a small breakdown. It doesn't mean anything yet though. The market's so sideways, like it could freaking do anything. I think I'm lucky in some ways here. I mean, I'm the top 3 greatest ever, but you know, definitely top 3 luckiest also. Bond yields over 4.5% as we speak here, chat. Bond yields over 4.5. 4.517's almost got up to 4.55s. Almost 4.6% bond yields, chat. Crazy. All right, we're ripping right back up here. Just hit 18.5s. All right, so now we're ripping back up. I don't really like any of this here. Nvidia at 110s just now. Tesla at 255s. Nasdaq up. That's good. Very sideways range here, chat. I'm not really interested in attacking either direction a lot. On this account that we're currently on, let's see how much we're up. Rate cut odds. Still at 70-30. Sorry, so I'm clicking other stuff. It's putting different stuff on my screen. This is Christmas music. Christmas in April, guys. Remember, we got the UMitch data. 10 a.m. All right, guys. Market's pumping back up over 18.6s now. Gold decreasing. Bond yields coming back down, still over 4.5%. Nasdaq flying. Tesla at the 257s. Bond prices rebounding. Yields falling. Good. $18.6 here. Gold coming down. All right, so we're still pumping up. We're at 18.6s. Again, I've kind of stopped trading as of now. My stock portfolio is doing pretty good today, though. You love to see it. Bond yields going down. Bond price is going up. Still over 4.5 though. I'm going to short this. It is kind of risky to short. All right, but we've got a huge cushion on the day. And we got University of Michigan data coming out, which is what giving me a little bit more optimism here. There we go. All right, we're going to go ahead and cut that. Just made another little $30 here. What am I up on the day on this account? I am up $220 on this account on the day. 220 bucks. We got out just in time too. We had this level here we wanted to get out with, so under 4.5% again for bond yields. 12 minutes left, chat. 12 minutes. China says the U.S. is, quote, weaponizing tariffs as a tool of bullying and coercion, turning itself into a joke, end quote. Whew. Y'all be careful, man. Right, so we did get a dip here at the top. Tesla turning all the way back down to 254s. Nvidia at 110s. No, this isn't trading stocks. I mean, again, guys, like I bought some equities a few days ago. We are in AMD, Amazon, Google, Microsoft, Target, and Tesla right now. But again, these are long-term positions. The reason we did this is because the market obviously had gone up a lot and then pulled back for a nice little entry, as well as like the market stopped reacting so much to the tariff news, which is a good thing, you know. So like we ended up buying back in a few days ago. We're flat on the positions still though. We're green on the day, but flat on the overall positions. But again, they're long-term positions, so like even if we keep going down, it doesn't really matter too much. You know, we're not too concerned about it either way. Like, we're going to hold these a long time. And again, as I said early this morning, we're only really investing money we're okay with completely losing if it comes down to that. And we're not going to completely lose any of this. So we're not going to completely lose any of these positions because none of them are going to zero anyway. But they're long-term investments. All right, chat. Again, we got 9 minutes before University of Michigan consumer sentiment and inflation expectations data. Chat, 9 minutes. Again, if you want to check out TopStep, great way to help support your boy here in this channel. TopStep gives you a 50K demo. They test your skill with it. You pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, it is $50 for the base one. We're going to day trade this other account that we're slightly red in. Again, it's $50 for the base one. If you fail it, you lose $50. They give you a practice account. You can practice on that. They give you some structure. Most day traders lose money. And so if you put up 5, 10, 20, 30 grand yourself, you're probably going to lose that day trading. Let's just be real here. You need a structure environment, and most day traders lose for the first few years. It doesn't make any sense to fund your own account in those first few years while most day traders lose. Instead, limit your risk with a funded account program. It gives you structure. They teach you to follow rules. The TopStep challenge gives you a 50K demo if you can make 3K without losing 2K first, following their rules. They fund you 50K, 90% split. You get to keep your first 10K prior to the split kicking in. Very similar to funding your own account. Noticeably less risk. Great way to learn how to trade under structure. Tons of great resources. And they've been around for over 12 years. Fund millions and millions of dollars and pay out millions and millions of dollars to their traders. And it gives you structure. In the futures market, there's no PDT rule as well, so it gets you around the PDT rule. It's just less risk. Great way to learn. If you want to check it out, they are an affiliate of mine. Some say I'm the top 3 most biased person in the world right now. Definitely top 3-ish most biased ever. They're an affiliate of mine. I get paid by them. But understand CFTC 4.41, hypothetical or stimulated performance, have limitations, not an investment professional, not liable if you lose money. Don't copy me. I have no idea what I'm talking about. With that said, though, the link is in the chat if you want to check it out. We got the University of Michigan consumer sentiment data at about 7.5 minutes. 7.5 minutes for the UMich consumer sentiment inflation expectation data here. It's actually a pretty big report. We'll see what it looks like, but not a small report. I'll put it that way. Yeah, so again, University of Michigan consumer inflation expectations and data here. Important. Let's talk about it. Okay. So University of Michigan every 2 weeks releases a report. One of them is called the prelim report. The other one is the finalized, the actual numbers. One of them is basically a guess. The other one is the actual numbers. Today we have the guess of the University of Michigan Consumer Sentiment Report. It is expected today at 54. 54 for prelim numbers for April. Prelim numbers for April. We also have Michigan 1 and 5 year inflation expectations for the current month of April. All right. So this is more real-time inflation expectations. That's what I'm paying attention to in this report. I want to see what the consumer sentiment is. I want to know what the inflation expectations are for the next year to 5 years, right? Because that's what's showing up here. Last time, 1 year showed up at 5% inflation expectations. 5 years showed up at 4.1% for inflation expectations. And again, this is done by the University of Michigan. It's not just for Michigan. It's for the entire country. But it's done by UMich. And yeah, we'll see what the inflation expectations look like for April. See what the current consumer sentiment looks like for April. Very important report. NASDAQ's pumping up ahead of this report, though. We got 6 minutes left. 6 minutes exactly left here, chat. And yeah, we'll see what we get. Let's get good stuff. Good, bad. You think we're going to get good or bad stuff here? I'll get some music up. Where is my music? There it is. All right. I mean, we've been trading all morning. We're up 200 something in our other account. This account we're down slightly. Since we got the University of Michigan data coming out, I'm going to short this. We'll add to it now that we're in the green. There we go. Out. Made about $70 just now. $70. We're now green on this account too. You love to see it. How many days green am I on this account? Hold on. I'm not trading the green streak account that I'm in. My short idea right here was correct too. We got the UMich data coming out, so like the market might be flat leading into it. All right, we just made a little bit on this account too, on our actual green streak account. Check me out, though, guys. Like, listen, check me out here. I gotta brag a little bit here. I mean, what am I doing? This is my stats. So we have not had a losing day in this account, at least. And we got a bunch of accounts, to be honest. But in this specific account, we have not had a losing day in 1, 2, 3, 4, 5, 6, 7, 8 days. 8-day green streak. We've only had 2 losses out of 8, 9, 10, 11, 12, 13, 14. 2 losing days out of 14. Pretty good accuracy. We'll see if we can keep that up. Bond yield still hovering just under 4.5%. Just under 4.5%. We got 3.5 minutes left. Yeah, you got to celebrate your wins when you get them, McFortune. 100%, bro. Like, people get mad. They're like, oh, you brag too much, bro. But, like, dude, trading's tough. Like, you gotta celebrate your W's when you get them, you know? You better believe I'm the top 3 most celebratory trader in the world today. We're testing highs here. We got 3 minutes left. 3 minutes. Bank earnings were okay. A lot of companies beat EPS, missed revenue. All right, guys. Bond yields now over 4.5% again. All right, guys. 2.5 minutes. Any recommendations for getting into day trading while having a full-time job? It's tough to do that. You know, you can try to day trade before. You can take longer-term day trades that you can manage at work. That's probably the best way. Take longer-term kind of swing trading style day trades while you're at work. Still tough to do, but that's what I would try to do. Probably that, or just day trade different sessions that are early. Get up early. It's going to take some work, though. All right, guys. University of Michigan consumer sentiment report coming out in 2 minutes. 2 minutes. All right, here we go. 2 minutes. Bond yield still increasing. Bond price is still going down just now. TLT at 85.70s. Michigan consumer sentiment data goes live at 10 a.m. It's University of Michigan compiling the U.S. consumer sentiment for April, which is the current month, prelim data. So that's like the most real-time data. All right, here we go. About a minute left, chat. About 1 minute left. Again, consumer sentiment expected at 54 currently. We'll see if inflation expectations increase or decrease relative to last time. Bond yield steady rising. Bond price is steady falling this morning. $40 seconds, chat. 40 seconds. All right, 20 seconds. Hit the live button next to the play button. Bond yields testing highs. 15 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and 50.8, lower than expected consumer sentiment. 50.8 versus 54 expected. 1 year inflation expectations increased from 5% to 6.7%. From 5% to 6.7%. 5 year inflation expectations increased from 4.1% by the University of Michigan to 4.4%. 4.4%. Again, 6.7 1 year inflation expectations, 4.4 5 year inflation expectations. Consumer sentiment showed up lower at 50.8 versus 54 expected. Weaker everywhere. Stagflation report here, to be honest. 1 year inflation expectations for April showed 6 point what percent? What was it? 6.7%. 6.7% versus 5% last time. 5 year inflation expectations showed 4.4%. Sheesh, dude, that's bad. It didn't really make markets move that much, but all right, market's heading down on this report as it should, because inflation expectations increased. We got a full breakdown of the whole report. We'll put it up on screen, but that is not good here, chat. Not good. Again, consumer sentiment for April came in at 50.8 versus 54 expected. We'll put it up on screen. This is why we were waiting for this report this morning, man. We actually did get a pretty big reaction. I'll put this all up on screen. We'll put 5 year as well here. All right, guys, here is the total numbers that just showed up. Just to put this into perspective, total numbers that just showed up right here. Just in this area right here. Not good. Not good. Higher inflation, weaker economic consumer sentiment reports. Bond yields. Yeah, again, just to clarify, 50.8 versus 54 expected. 57 prior. 1 year inflation expectations for April showed 6.7 versus 5% last time. 5-year inflation expectations showed 4.4%. Markets are falling quickly. Tesla down. NASDAQ down. Nvidia down. Microsoft down. And again, guys, listen. If you want a place that covers all this stuff as soon as it happens live, right? We've been doing this for years. If you want to know somebody that, if you want to follow somebody that actually understands what's going on in finance, and you want a one-stop shop where you can watch Powell, CPI, PPI, inflation, economic forecasts, speeches, all that good stuff. We cover it all live. We trade live every day. I don't even claim to be a good trader. We just give people free stuff. Don't sell a course. Don't sell a service. Report economic data quickly, and we get thousands of people tuning in for the big ones because of this. And I wouldn't really call this one a big one. Yesterday for CPI, we had 4,500, 5,000 people watching. So we get some good fun here during the big report. So subscribe, hit the notification bell. I appreciate it. And yeah, we have had multiple red candles since this report. About 4 or 5 red candles since this report. Although I do see bonds currently bouncing back here. Not gonna lie, you're the best at summarizing info. Hey, thank you, bro. I appreciate it. Thank you, sir. I try, man. I try. Like we try to give people stuff. All right, so look at this level here. Do I want to short? I don't know, dude. I don't want to lose this green streak, to be honest. Like maybe I'm trading a little bit too safe here because I'm on like a 8-day green streak. But I think I'm just going to sit it down. Like, here's my graph for going back to, like, mid-March. Green on the account. There's my graph going back to mid-March. Here's my actual trades. I think I showed this earlier. I'm proud of this. This is a good number. Nice little data here. Bond price is rising, though. Look at bond prices going up. This means yields may be going down. Let's watch gold. Let's watch other blue chips. Let's see if the 200 exponential influences it here. You missed the short. Yeah, well, I'm not going to attack it. Like, number one, I'm not going to jump in right as soon as the data is released. It's too risky for that. And again, we're not going to trade every single release. Like, we're going to trade live, but we're not going to trade every release. That's dumb. It's too risky and volatile. That's gamblers. Like, you might as well go play roulette or something if you're going to try to trade every release. For real, man, he's got to have 5 to 10 screens. He's summarizing it while I'm still looking at it. Y'all want to see what my screen looks like? The one that y'all can't see? Y'all want to see what my screen looks like? The one that y'all can't see? Look, I'll show you guys. If I could get a picture of it, honestly, bro. I don't really have that much room. All right, guys. Market is consolidating here. Let's see if I can catch it. Yeah, I'm trying to catch the whole screen, but it really doesn't fit in the frame. I've got an ultra wide monitor. An ultra wide monitor. It's pretty useful. Like, I could write it off, and it's pretty useful. Check it out. So this is my setup right now. All right, so we're rebounding back up here. All right, guys. And again, if you want to check out Top Step, great way to help support the channel. Before you want to look at my setup, if you want to check out Top Step, great way to help support the channel. We are nicely green on there. No PD and T in futures. You can day trade the S&P, the Dow, the NASDAQ, the Russell, gold, some currencies. Great way to learn day trading, structured environment. They give you a 50K demo, test your skill. You pass the test. They fund you. If you fail, you only lose. The base one is $49. It's not the end of the world. And then they give you a real-time practice account to learn on. And they paid out hundreds of millions of dollars, fund thousands of traders. Just a great community, great resource. Check them out. Here's a link. Sorry, for whatever reason, this image is taking too long to load. Hold on. I got you guys. Why are you talking so fast? Because I got ADHD, and I'm going to spit it out quickly. Because I think fast. Top 3 fastest thinker of all time ever in the world right now. But now, look, here is... This is what I see on the bottom. It's a 49-inch ultra wide monitor is what it is. You don't talk fact, people just listen too slow. Yeah, for sure. Yeah, so that's my monitor setup. And again, I could write it off. So that monitor was not cheap though. This thing, I can't remember. It was like, this is like a, I can't remember what, it's like a G9 or something like that. It's a 49-inch ultra wide. It was like $2,000, I think, or something like that. But I could write it off luckily, but still. It's a big monitor. Yeah, I do got to get the Stream Deck working. I'm not bragging, bro. I mean, I guess I am a little bit. If you had a monitor like that, y'all would brag about it too. Yeah, no, I got ADHD terribly bad. And I actually have it too. A lot of people just say they have it, but, you know, because they're just unmotivated. Bad impulse control. Like, one of my issues is, like, I want to relate to people so bad that I'll just blurt out and over them. And I'm trying to, like, relate to them. So I talk about myself, but then they're like, oh, this guy hijacked the conversation. That's a problem with me, I think, sometimes, too. I used to have 4 monitors, but I switched it out. Again, I'm probably done for the day. I'm green in every account that I have for the most part. Yeah. I have, well, ADHD is attention deficit and hyperactive disorder. So I have hyperactive for sure. Trust me, like, everybody hates me in the mornings. Me and my son are like bouncing off the walls in the morning. My wife and daughter struggle to wake up. And so I have extreme hyperactivity, but it's also useful because you can, like, if you're interested in something, you can like zone into it, and it can be helpful. But I definitely don't take any type of ADHD medication. Like, I've been prescribed it my whole life, but I haven't taken ADHD meds, you know, in a long time. Years. You know, just because, like, I don't really like the way I feel on ADHD medication. Number one, I don't get excited for anything. And so, like, if I take ADHD meds, I just kind of sit still on the couch. And I guess I can focus better, but I don't get excited for anything. Versus not taking ADHD meds, where I can get really excited about things that I'm interested in. And, like, I can watch UFC fights and get excited about it. I can, like, train and get excited about it. Like, I can do all this different stuff that I like. But when I take the meds, it kind of, like, numbs me in a way, right? And my doctor told me that that's because I actually have ADHD. They say if you take ADHD meds and you start jumping off the wall, you probably don't have ADHD because it's supposed to calm you. I don't know. I don't even know if that's nonsense either. Who knows, man? It's probably overprescribed anyway. Anyways, market's turning down.
All right, we're very flat, guys. We haven't really moved. Somehow I've been able to profit from it, but we're kind of flat. And I don't judge anybody for anything. I really don't. I'm not one to judge people for stuff, but top 3 judgiest ever though. But no, I don't really judge people for anything. I understand context is important, and people are just different. So. Yeah, I don't know. I thought about hanging it up, and I'm terrible at golf. I've tried to go play golf, bro, and like, I'm not much of a drinker either. And like, every time anybody's like, "Hey, let's go play golf," they're getting like ish-faced drunk, and then I'm sitting there like I'll drink, you know. And it's just not. And then I'm terrible at it too. And I like played baseball, so I'm trying to like hit it like a freaking baseball, you know, which means I can hit it really far, but who knows where that thing is going. That thing might go straight to the left when I hit it. It might go straight to the right. Nobody knows where it's going. And I have a very hard time. Like, I'm used to, apparently in golf, you're supposed to not bend your hand. And I'm swinging at it like a baseball. I'm bending my elbows and swiping at that thing like it's a baseball. And I don't have the patience for golf. I really don't. I'm just not good at it. Maybe when I get old and I can't do jiu-jitsu or something, I'll do golf. And I'm not judging anybody if they want to do that while they're playing golf too. I don't care, you know. But all right, guys, look, I'm just kind of talking to you guys about random stuff, so it's probably time to just end the stream. Market's flat, not doing anything. Y'all be safe today, guys. Listen, market's fun. Next week we got retail sales, some earnings, and other stuff too next week. Let me see what we got. I think we got like retail sales. Yeah. We got import-export prices. Patrick Harker and Bostic speaking Monday. Import-export prices Tuesday. Empire Manufacturing Tuesday. Retail sales Wednesday. Business inventory capacity utilization rates. Industrial production and home builder confidence index Thursday. Jobless claims, housing starts, building permits, Philly Fed manufacturing survey, daily speaking. And yeah, y'all be good. Hey, have a great day. I'll see you guys later. Y'all be good. We'll see what happens. Market ends red, green. I don't know. Later, guys. Y'all be